Hi, and welcome to Wade's Weekly Update. I am Wade Byers, the Helpful Mortgage Man, here with Benchmark Home Loans in Middle Tennessee, based right here in Mount Juliet, Tennessee. Today is October the 14th, and it is Columbus Day. I have just gotten back from a nice little vacation in Orange Beach, Alabama. So I'm here on Columbus Day, of course, ready to help anybody that I can. So if you need anything, certainly give me a shout. Today I wanted to touch a little bit on the government shutdown and the debt ceiling. Still kind of the talk of the news right now. When we left on Friday, at the end of the day Friday, there was some good optimism that they would have something worked out. Unfortunately, over the weekend, that optimism has faded away and everybody is quite nervous about what's going to happen. I still feel very confident that they will get all this worked out. But of course it is making everybody a little bit nervous right now as the deadline of October 17th is quickly approaching. I do want to reiterate to you that during the shutdown and during all this talk, of course, here at Benchmark Home Loans, we are having a very little impact on getting your loan closed on time due to that. We've kind of revamped the process and taken the necessary steps to make sure that your loan closes on time. Today I wanted to talk about myth number 3 in the real estate market. This is kind of all over the country, but especially here in Middle Tennessee as well. The number 3 myth in real estate is that fixed rate loans are the only way to go when purchasing your house or trying to do a refinance. That just simply isn't the case. That of course the fixed rate loan is a fabulous product and will always be a good product, especially if you plan to live in your house for the rest of your life. But the typical life of a mortgage over the last 10 years has not been more than 5 years long. So typically within that 5 years, we are either refinancing or selling our house or something like that. So the adjustable rate mortgage is actually a really nice product. It's gotten a lot of bad reputation over the years because there were some bad products out there. The key with the adjustable rate mortgage is make sure you're working with somebody that will explain the loan to you. It's really a good loan. It can help you get a lower payment and get a lower interest rate. Typically, you're looking at a 3, 5, 7, and there's even a 10-year arm, where during that time period your interest rate is going to stay fixed. And then after that time period, it will start adjusting based on the market. So, typically you could get probably half a point to even a point better interest rate utilizing an adjustable rate mortgage. Like I say, the key is just to make sure you understand exactly what the product is. And of course, if you're working with Wade, the Helpful Mortgage Man, I'll always be sure to let you know exactly how that loan works. And if you want to learn more about adjustable rate mortgages and how they work, give me a call. I'll be glad to explain to you how they are, especially right now as rates are starting to increase. The pricing and the rates for adjustable rate mortgages seem to be very attractive and can be a good way to get your payment just a little bit lower. But of course, as I always let people know, do not don't buy into anything that you don't understand. So certainly make sure that you are getting all the facts about that product before you sign the line there. So again, I am Wade Byers, the Helpful Mortgage Man with Benchmark Home Loans. Thanks so much for your time today. If there's anything I can do for you, always feel free to give me a shout or shoot me a text at 615-335-3356, and I will be glad to do what I can to help. And hope you all have a great week, and we will talk next week. Bye-bye.